Hi, I'm Keon, a senior research analyst with Thomson Reuters Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, June 21st. Let's start by taking a quick look at the market activity for the week. The Dow Jones Industrial Average was up 0.17%, while the S&P 500 index had a slight decrease of 0.09%. Both of the indices were hurt in the latter half of the week by a slump in energy stocks. This slump was caused by a decline in oil prices, which was triggered by an increased supply from several key producers, which once again sparked fears around the globe of a global oversupply of crude. These fears persisted despite the previous efforts by OPEC to make sure that oil producers did not overproduce. Let's switch back now to the fund flows activity for the week. We'll start by taking a look at our macro fund groups. Equity mutual funds had net inflows of $262 million for the week. Taxable bond funds took in $2.7 billion. Muni Bond funds saw about $947 million leave, while money market funds saw net outflows of $20.7 billion. Let's take a closer look at each macro group now. We'll start by taking a look at the equity funds, starting with the mutual fund group. The $262 million inflow broke a streak of 12 straight weekly outflows. It is only the third positive flow for the year to date for the group. Once again, non-domestic equity funds were responsible for the inflows. They took in about $1.5 billion in net new money, while domestic equity funds had outflows of $1.2 billion. For the year to date, this trend continues. Domestic equity funds have seen roughly $26 billion leave for the year, while non-domestic equity funds have net inflows of just over $13 billion. Let's move on to the equity ETF category now. This group had net outflows for the week. They saw about $2.4 billion leave. The largest outflows belong to the iShares Core S&P 500 product, which had $2.3 billion leave, and the Spider S&P 500 had net outflows of $710 million. On the plus side, the utility select sector Spider product took in about $460 million in net new money, and the iShares MSCI Japan had roughly about $360 million in net inflows. Moving on now, we'll take a look at our taxable bond fund groups, starting with mutual funds. This group had net inflows of $2.7 billion last week. It was their third straight weekly inflow. For the year to date, taxable bond mutual funds are up roughly $97.4 billion. This is by far the largest net inflow of the fund macro groups. These net inflows have been driven by short and intermediate investment grade products, which have accounted for the lion's share. They've taken in over $60 billion in net new money for the year to date. This week's big winners were core plus bond funds with net inflows of $480 million and multi-sector income funds, which took in $314 million in net new money. Moving on now, we'll take a look at the taxable bond ETF group. They also had net inflows last week, roughly $318 million. It was their sixth straight weekly inflow. The big winners for the week were the iShares short-term treasury product with $342 million in positive flows. The iShares Core U.S. aggregate product had $200 million in net inflows. And on the other side of the ledger, we see the iShares 20-plus year treasury product with net outflows of about $430 million. Moving on now, we'll take a look at our Muni Bond group. Our data for the week shows a net outflow of $947 million. We believe we're still looking into this number. We believe it may be an internal accounting issue, so we may revise this number later. But at the time we went to press, $947 million net outflow is still the number we're going with. The biggest contributor to net outflows this week were general and insured muni debt funds, which saw about $1.3 billion leave. And on the plus side of the ledger was the high yield muni group with about $226 million in net new money coming in. Our last group to take a look at is money market funds. Big outflows for this group last week, about $20.7 billion. The main contributors to the outflows were two institutional groups. The institutional U.S. government money market fund peer group saw about $13.6 billion leave their coffers, and the institutional U.S. Treasury money market funds group had about $7.9 billion leave. Well, that wraps up this week's report. If you'd like to take a closer look at our data for yourself, please go to our website at www.lipperusfundflows.com, and please join us here again next week where another one of our analysts will speak to you about that week's fund flows activity.